I'm Reverend Julia Benite.
I'm Godi Odidi.
My name is Professor Oladokun Sulaiman Olarawaju.
Souq News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Souq News.
So I'm happy that Souq TV has come into existence.
I'm happy to be here in the Souq News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Souq News is doing that.
Africa needs a voice of truth, and Souq News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Souq News.
Keep watching Souq News. It's a place to be.
Keep watching Souq News.
Good morning and welcome to Early Exchange with Blessing Aiche, Femi Ayodele, Sam Oruwoje, and Idahosa Osamanze.
It's a national orientation agency. It's, as far as I'm concerned, very idle and unprofessional.
Government says that subsidy is not in oil, and government is not supposed to be paying subsidy in oil.
Energy or whatever kind of off-grid solution we will be looking at.
Today we are conducting mining today. Solid minerals, as an example, is, in no disrespect to anybody, is abysmal. We definitely need improvements in those areas. Of course, there are infrastructural needs.
This is Early Exchange, shaping policy, advancing development.
Good morning. It's a new day and the dawn of a new day, the dawn of a new beginning for us, and another opportunity for us to look at issues related to business, finance, global issue, and the economy. This is Early Exchange, and I am Femi Ayodele. Today we'll be looking at the big four investment destinations in Africa. Africa is becoming of interest to investors all over the world. And what are these countries that have been of interest to investors all over the world? We're also going to take a look at the ban by the Lagos state government placed on styrofoam, what is popularly known as disposable plastic here, in Lagos. We're going to look at the effect of those things. These are more of the things we're going to look at on Early Exchange today. Don't forget, you can be part of this conversation as regards this topic by going on our social media platform, on our YouTube page to share your view using the hashtag Early Exchange. Don't forget, it's your program. And we hope that as you spend the next 2 hours with us, we're going to make your day worthwhile. I hope you're ready. As Blessing is also ready. Blessing, how are you this morning?
I'm well. Good morning, Femi.
Yeah, good to see you again.
Same here.
Yeah, it's always a pleasure being here, and it's my joy.
Yes, it gives one joy when you know that you're helping people start their morning and providing them with the information from wherever they are, the comfort of their homes, offices, business place. They can just be abreast of current happenings, not just current happenings. Some may be wondering, how does it impact them? But we also help them get a perspective that is relevant and one that is positive as well, because on Early Exchange we do not break the bad news. Even when bad news happens, we help you find a way to turn it around to something good for you, something good for your business, something good for your life. And thank you very much for joining us on today's edition of the show. Trust me, you will not regret the time that you spent here with us on Early Exchange. Straight away, let's get over now to Adesua Irimusela, who's standing by to bring you news updates. Hello, Adesua.
Hello and welcome to News Update on Souq News. I'm Adesua Iromoseli. The Chief Executive Director, African Development Studies Center, and President Femi Walsh Limited, Ambassador Victor Walsh Oluwafemi, has stressed the need for government to diversify revenue sources and strategies to decrease oil dependency while enhancing fiscal resilience. He noted this at the opening ceremony of a service-wide strategic training on enhancing public revenue and expenditure management organized by Fiscal Responsibility Commission and African Development Studies Center, holding in Lagos, Nigeria. According to him, expertise in revenue generation and expenditure management, especially in the public sector, is crucial, and the training will focus on dissecting federal revenue sources in a bid to strengthen the nation's economy. The 5-day training program will feature critical topics like operating surplus computation, borrowing strategies, budgeting for projects, including the medium-term expenditure framework, among others. And now the Nigerian Exchange Limited, NGX, has officially listed an additional 2.864 billion ordinary shares of Sovereign Trust Insurance PLC, each valued at 50 kobo, on its daily official list. The development, as reported in the NGX's weekly report, stems from Sovereign Trust's right issues. The report reveals that this listing has raised the total issued and fully paid up shares of Sovereign Trust from 11.364 million to 14.228 billion ordinary shares. In 2023, Sovereign Trust Insurance successfully raised 1.421 billion naira in new equity fund through a right issue from existing shareholders. The funding will be allocated to business expansion, working capital, development of retail products, and enhancement of investment portfolio. Moving on, Netflix head of film, Scott Stauber, is set to depart from the streaming giant in March to establish its own media company. Having joined Netflix in 2017 to bolster its original film offerings, Stauber became the chairman of Netflix Film in January 2023. During his tenure, he cultivated relationships with acclaimed filmmakers such as Alfonso Cuarón, Spike Lee, Greta Gerwig, Rian Johnson, among others. Under his leadership, Netflix emerged as the most academic award-nominated studio for 3 consecutive years, from 2020 to 2022. Notably, successes including 8 Best Picture nominations for films like The Irishman, Roma, and The Power of the Dog. Stauber's new venture is expected to collaborate with Netflix on future projects in order to reinforce the impact of its creative contribution to the streaming service. And away from the media, Bitcoin experienced a dip to a 7-week low yesterday, dropping below $40,000 for the first time since the introduction of 11 spot Bitcoin exchange trading funds, ETFs, on January 11. According to reports, the world's largest cryptocurrency, currently down 8% at $39,938, is trading at its lowest point since December 4 after a brief recovery. Similarly, Ether, the second largest cryptocurrency, also saw a decline of 6.37% at $2,328. The recent fall follows Bitcoin's early rally fueled by anticipation of U.S. Securities and Exchange Commission (SEC) approved for Bitcoin ETFs, which has contributed to a 70% gain since August. The pressure on Bitcoin is attributed to outflows from Grayscale Investments Bitcoin Trust, converted into an ETF after SEC approval of other Bitcoin ETFs products this month. And in the Middle East, Saudi Basic Industries Corp, SABIC, is set to construct a $6.4 billion petrochemical complex in Fujian Province, China. According to Arab News Network, partnering with state-owned Fujian Fuhua Jelly Petrochemical in a joint venture initially proposed in 2018, reinforces Saudi Arabia's ties with China, the leading global oil importer. Anticipated to commence construction in the first quarter of 2024 and conclude in the first quarter of 2027, the complex aims to produce 1.8 million metric tons of ethylene annually. Notably, this venture mirrors a trend of collaborations between Saudi entities and Chinese refiners, with Saudi Aramco making similar investments in China's downstream sector. And with that, we call it a wrap on the news update. I'm Adesua Irabosele. Many thanks for watching.
All right, thank you, Adesua, for the news update. We'll go on a short break now. When we return, we'll kick off our major conversation for today. Stay with us.
The National Theatre, Igomu, built during the military regime of Olusegun Obasanjo and finished in the time for the Second World Festival of Black Arts and Culture, Souq, in 1977. The theatre holds amazing treasures and memories. The artworks fill everyone with pride. The National Arts Theatre is visible from the motorway which connects Lagos Island and the mainland. The National Theatre is packed with the artworks of a legendary contemporary Nigerian artist, stained glass walls by Yusuf Grillo, sculptures and murals by Lamidi Fakeye, Erabo Emopai, and many others. It was put to full use for a month as one of the 4 venues of the Second World Black and African Festival of Arts and Culture, tagged Souq 77. The complex hosted 16,000 participants from 56 African countries and the diaspora in an unprecedented showcase of African music, fine art, literature, drama, dance, and religion. The National Art Theatre was built and designed by Techno Expert Stroll, a Bulgarian company mirroring the Palace of Culture and Sports in Varna, Bulgaria. Completed in 1976, the building is one of the largest and most beautiful of its kind on the African continent. It consists of a central hall with 5,000 seats, a collapsible stage that can be quickly rebuilt, a conference hall with 1,600 seats, 2 large exhibition halls, and 2 cinemas with 800 seats each. The theatre complex has a dressing room for artists, a garage, offices, coffee bars, and a buffet. It has indoor TV and radio systems, as well as booths with facilities for simultaneous translation of languages and hectares of lush green lawn around. The majestic structure sits in Igomu like a quiet mountain, mesmerizing visitors and passers-by. The National Theatre, Souq Enlightenment.
My name is Dr. Rafiu Oladipo.
My name is Baba Jalal Repega.
I'm Reverend Juliet Benite.
I'm Godi Odidi.
My name is Professor Oladokun Sulaiman Olarawaju.
Souq News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Souq News.
So I'm happy that Souq TV has come into existence.
I'm happy to be here in the Souq News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Souq News is doing that.
Africa needs a voice of truth, and Souq News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Souq News.
Keep watching Souq News. It's a place to be.
Keep watching Souq News.
Good morning and welcome to Early Exchange with Blessing Aiche, Femi Ayodele, Sam Oruoje, and Ida Hosa Osamanze.
It's a national orientation agency. is, as far as I'm concerned, very idle and unprofessional.
The government says that subsidy is not in oil, and government is not supposed to be paying subsidy in oil.
Energy or whatever kind of oil-green solution we will be looking at.
Today we are conducting mining today. Solid minerals, as an example, is, in no disrespect to anybody, is abysmal. We definitely need improvements in those areas. Of course, there are infrastructural needs.
This is Early Exchange, shaping policy, advancing development.
It's good to know you're still with us in Early Exchange. Now to our first discussion, which is the good news that 4 countries in Africa have emerged as the most attractive investment destinations. I'm talking about Egypt. There is also South Africa and Nigeria and Kenya. Those 4 countries have taken a whopping 68% of the investment share in the year 2023. And we're going to look at what has made these 4 countries become like the big 4, what they qualify them as now, the epicenters of the continent, and what that means for Africa. This will form a discussion this morning. We're bringing a guest who will be talking about this, but that will be after a while. Femi, I know that being a Nigerian, you feel glad to hear that Nigeria is named as one of the 4 countries in Africa that are the most attractive destinations, and having the 4 countries together gathered 68% of 6% share of the investment influx in 2023. What are your thoughts about it and your feelings?
You know, if there's any time you're proud as a Nigerian, you know, it's a time like this. You know, most of the time, the narrative you have about Africa is, okay, Africa, it's all about bad news and all that. But it excites me when I hear this kind of good news. It makes my day. And I'm not surprised that Nigeria is on the list, because you must understand, not because I'm being subjective here, but you must understand that when you look at our GDP, it's one of the largest in Africa. When you look at the top destinations for investors in Africa, from number 1 to 10, Nigeria is occupying like the 2nd or the 3rd position. So these countries, they are of interest to investors, and that's why they are called the Big 4. You know, they've been categorized into that category of the quartet of Egypt, Kenya, South Africa, and Nigeria. And the question is, these countries, what do they have in common? You will understand that Africa is becoming the new emerging market now for investors. It seems to them that the Middle East, Europe is saturated, and because of the peculiarity of the resources that we have, when it comes to mineral resources, when it comes to natural resources, Africa is blessed. But particularly if you look at these countries, Nigeria, you know, happens to be the giant of Africa, and not just a name. Of course, it's questionable or debatable to some people that are we really giants of Africa when it comes to the issue of the economic growth and development. But we are giants of Africa based on the resources that we have as a country, looking at our GDP, looking at some of our natural resources. And so I wasn't surprised when this report said that these 4 countries, the quartet of Egypt, South Africa, Kenya, and Nigeria, accounted for 68% of the investment that happened in the year 2023. And this year, another report is also suggesting, you know, countries that have interest to investors in the year 2024. And interestingly, Nigeria is also part of it. And also, if you look at why Africa is of interest, is because even though there are several challenges when it comes to the business environment, when it comes to the issue of regulation, when it comes to the issue of policy sort, and then looking at insecurity as well. In spite of all these challenges, you know, people are still coming to Africa to invest in Africa. And that's a lesson to some of us who feel nothing good can come out of Nigeria. We still want to jackpot. You know, it's becoming the rave of the moment now. You want to leave the country. And do you observe when you get to airports, you know, across the nation, the one in Lagos, Abuja, you see Nigerians living in droves. Then you see the Europeans or the white people coming back to Nigeria because they see what we don't see. maybe because of the fact that we're too familiar with our environment, we don't
You
seem
know what
to
they
see.
say about familiarity breeding contempt.
You know, that could also be one of the factors. But it's a good thing to show that there's something good about Nigeria, and that's why the investors are looking into these countries. And it's important for us to talk about it, for us to dissect it, for people to understand why these countries are of interest to, you know, to investors. Looking at Kenya, Kenya is battling with, you know, serious debt profile. But in spite of that, you know, in spite of that, they are still of interest to investors. All right, let's see what our guests will have to say about this. We have the privilege of hosting Ambassador Williams Wallace, who is the ambassador to Ambassador. It's a global expert and he's a man of many parts. You know, Ambassador Williams, glad to have you join us on Early Exchange this morning.
Always a pleasure to join you, Femi. The station hits the issues on the head always.
Don't mind me. Maybe I'm just excited hosting you this morning again. It's always a pleasure.
Thank you very much. Thank you very much.
All right.
So,
now let's look at this report suggesting.
a very good prelude.
I hope you can hear me.
I can hear you. Can you hear me?
Okay, great. All right, let's look at this report suggesting the quarters of Nigeria, Kenya, South Africa, you know, are becoming the hotspots for investors in Africa. I would like to know from your own experience and from your own dealings as an investor and as a global affairs analyst, why do you think these countries, they are of interest to international investors, and what do they have in common?
Right. Well, first, the first part of your question is very interesting. What do they see? They see a gap. Any investor going into any country, they see a gap. And normally, the countries themselves perhaps miss that gap. They look at, one, your population. If you look at Nigeria and all the four countries that you spoke about, they all four have a very large population. If you look at Africa, as a rule, you have, you know, very young population as well, vibrant, digitally savvy. And secondly, when you look at what are the countries they're heading for, those are the countries that have resources. Quite a number of resources. South Africa, what are we looking at? We're looking at mining. We're looking at gold, diamond. Those are very strong reasons to go to South Africa and invest. When you look at Nigeria, you're looking at 36 countries in effect. Our 36 states in Nigeria, on average, most of the GDPs of each of those states are higher than most countries in Africa as a whole. So therefore, they're looking at 36 markets in Nigeria, each state having their own resources, apart from our main process, which is oil, but we have gas in trillions of cubic meters. We have all the raw materials that you find elsewhere. We also have gold, we also have diamond, we also have lithium, all the precious rare resources and rare, raw materials. Kenya, a huge agricultural basket, tea. They also have oil and gas, but you know, a minimum. But you're also looking at the near markets. So when they look at those, and Egypt, when you look at those four cardinal points in Africa, you're looking at one, the captive market, which is Nigeria. So before they even leave the country, they can start making money in the captive markets of Kenya, South Africa, Nigeria, and Egypt. Then you look at the near markets. Those are the things people are not looking at. What are the near markets? Your near markets are all of West Africa using Nigeria as a base. Look at the near market for Kenya, the whole of East Africa, Uganda, Tanzania, Rwanda, Congo. They are huge near markets. You look at South Africa, Botswana, Zimbabwe, Lesotho, they are near markets. Look at Egypt. They're also looking at near markets in North Africa, plus the captive market. So when you look at what are they seeing, they are seeing markets and they are seeing resources. And that is probably what we as Africans keep missing. We keep missing the fact that we have the market, we have the population, we have the resources. Everyone should get involved in one way or the other, starting a small business and expanding. And the governments now should fast track and incubate businesses to take advantage of those gaps in the market that investors from outside are seeing. They're not coming to make your life happy. They're coming to make money, double, triple, and quadruple their investments. Is it the raw materials that they are going to take away and process and sell back? Or is it, services that they see a gap in? For example, Jumaya, you talk about, Uber and all these other services. What did they see? And where are they making most of their money? As you know, the airlines, for example, make a hell of a profit out of Nigeria alone. At one time, British Airways, 20 to 30% of their profit came from Nigeria alone. High value in seats. So it's the market. It's the market and the gap in the market that they are all seeing.
All right, Ambassador Wallace, it's good to see you in 2024. Happy New Year.
Thank you. Happy New Year to you too.
Thank you. All right, talking about filling the gap. Now, the report also has it that fintech is reeling in substantial investment, taking about 23% of the investment. Now, what should that mean for the financial sector in Africa?
Right. I'm also an innovator in fintech. I'm talking about a standard United Digital African Currency contract. Fintech is going to explode on the continent. We have so much innovation with our young digital savvy youths that right now, I think most of our countries, especially the 4 cardinal countries that are noted, should invest heavily in fintech, because fintech is the bloodline for transactions. And most people are now looking at alternative and innovative ways of using finance and using digital innovation in fintech. Yes, fintech now is going to drive a lot of our transactions, a lot of our businesses, and a lot of our young, youthful, digitally savvy young men and women on the continent. So I think from an overview point of view, Nigeria should, as our country, the rest of Africa should, look at investing, putting a lot of local content into developing our industries in fintech, because that will drive quite a lot of what we know as the accelerator for growth.
According to the report, other sectors being spotlighted include, agric, health, and education. Talk to us. What are some of the gaps these investors must have spotted in these sectors that is making them to deem it fit to invest in these sectors? Some of these sectors, you have agric, health, and education, has been of interest to these investors. What are the gaps in these sectors?
Right. So if you look at agriculture, for example, we have large swaths of very fertile land all over Africa. Is it the Congo? Is it Kenya? Is it Nigeria? So many states that we have good, fertile agricultural land. But what we are probably not having is investment internally from governments to set up, for example, why don't we set up, among youths, farmlands, provide a home and a 1 or 2 acres, give them a particular crop to develop, and let those crops be in a cooperative. Let's say the government has a cooperative in each state or in each community. You bring your produce and you sell the government. Government can now aggregate that throughout the country and then export the rest. They should play a role as a driver, So they're seeing that, look, you have fertile land, you have swaths of land that are underdeveloped and underfound. So they'll come in and use mechanized production to take advantage of the swaths of land that you have. And you know, for example, you know, if you look at some of the foreigners, whether it's Chinese or they're just buying up the land, developing it, and exporting from our own countries the produce for their own people. They saw that gap. But we now should block those gaps. We now should create farmlands and do what I call farming for the youth, let them know that it's attractive, let them know that they are guaranteed, for example, that they can have their produce bought immediately from government. I mean, they do it in the United States, don't they? They go to all the farms and they give them grants and they make sure that their produce is always bought, even if they don't sell it, but they guarantee that they buy it from you. And therefore, you are investing in your own people and the land. Okay, from agriculture, we go to health. The health sector in many of our countries are, you know, not properly looked after. We shouldn't have to be going to the UK or the United States. Let's invest in our doctors. Let's invest in our own pharmaceutical companies, because we have the market, we have the population. So if you look at health and then you look at education, in some countries, for example, in the Caribbean, education is free. You know, you look at India, what has India did with Mumbai? They hot house a lot of their talent into IT, which is now outsourced to the world. Most countries, is it Google? Is it Microsoft? Most are led by Indians who were hot-housed in India, who targeted and made sure that they invested in their people. And we have to do the same. It's knowledge-based economies. We should now do the same. Why shouldn't the education, for example, be free? You have enough funds, enough resources to provide education right up to university level and hothouse all of our knowledge-based individual in the country. Those are the gaps that they are seeing. So they will come and they will sell you, you know, education abroad. They will come and invest in private schools. We should be doing that. We should be investing in education, making sure that we can benefit from the knowledge chain that we have among our people. Again, it's gaps. It's gaps. They're all gaps that they're seeing, and we're not seeing it. We need to plug those gaps and make it benefit us. And that is where one of the things I drive, I'm passionate about, local content development. Local content development and human capital development. Those are two things that we must concentrate on as Africans.
All right. If you look broadly into the investment landscape, you find a diversification as investors are being attracted to new geographies such as Rwanda, Tunisia. These countries are referred to as emerging markets. Now, what do you think primarily is the attraction in those regions? You just talked about Africa building on content and human capital, but what else? How can these countries position well and take advantage of the investment funding that they're receiving now from investors?
Right. You've talked about a very correct issue here, because you mentioned Rwanda. Why are they finding Rwanda attractive? Ease of doing business. You can go to Rwanda, even online, and set up a company within 24 to 48 hours without having to pay any extra monies to individuals or gatekeepers. You can start your company and you have the ability to position yourself and your company immediately to start trading in the areas that you feel comfortable. So it also has to do with governance. It also has to do with ease of doing business. It also has to do with how can we, you know, make it attractive for investors to come and partner. And I think we should take a page out from, for example, Dubai. Partner with locals, or we should have a rule that if you're coming to invest, let us also have, a partnership with you. Make sure that individual nationals are participating with you. So we have knowledge transfer, we have the investment that are shared. We don't mind you taking, your profits away. That is also something that they are always looking at, the ease of doing business and the ease of recouping their investment and their profitability. But I also say that we should also ensure that we share in that wealth, because they're coming to take our resources, our products, our human capital. Let's participate and share in that venture and make it a rule that we are, and if you're coming to invest and we provide ease of doing business, then also make sure that you give something back to the country by participation of locals.
All right, looking at the African continent and some of the countries, in this continent, when it comes to natural resources, we are blessed. But people come up with this narrative. Why is it that Africa is not living up to expectation when it comes to maximizing its resources? In spite of the level of this investment, you still see, a low rate of economic growth and development. What are the missing links?
Yeah, because what is missing there is that the investment is lopsided. And again, this is where I keep, fanning the flames of local content. You cannot come to a country and invest and there's no participation of the communities and or the population. What do investors do? They come in, they maximize their investment alone and only perhaps with some individuals in government. So participation and local content is avoided because just a few will make that money. If we don't provide those funds ourselves and invest in the local content, then we cannot grow. And therefore the question about whether or not, we have all the resources, we have to have the equipment, we have to have the training, we have to have the skill, and we too have to have the investment. And this is where we talk about why do we go into these big major, what I will call irrelevant projects? Why are you building 10 stadiums? Why are we not investing in education? Why are we not investing in health? Why are we not investing in SMEs? Why are we not investing in skills transfer? Why are we not investing in the equipment required for those resources? Why are we not, for example, in education teaching mining, right? If we have so much resources, we should have a school of mining, for example, and be putting through graduates with also an addition to their mining degree and education, business orientation, how to start a mining business, how to get the capital, let the government also provide the capital to buy the equipment after you've been taught mining. So we have to invest in human capital development, local content, equipment, training, and also skills transfer. Those are the key things for growth. How can we grow and we have the resources and just say, okay, Mr. Foreigner, come with your investment, come with your capital, and you make as much as you want, as much as you can, and we are left out of that framework. If we are left out of that framework, you can't grow. You just can't grow because all you're doing is providing to the foreigner a white paper. Do what you want, do what you can, just pay a few of us and carry on. No, it has to stop. We have to now imbibe and invest in our local content and human capital development. And do, for example, in Trinidad has the University of Trinidad and Tobago. And what do? All the courses are geared towards the sector of oil and gas, which is the natural resource of Trinidad. What do they have? They have a National Energy Skills Center. All the skills required to plug the gaps in that sector so that foreigners don't come and have those jobs. They make sure that they train their local. And that's why local content from Trinidad and Tobago, which I brought to Nigeria And we're happily now, you have National Content Monitoring Development Board is trying to drive that process. But we need more of that in other areas, not just in oil and gas. We need it in mining. We need it in agriculture. We need it in education. We need to now set up, schools of local content thought to drive the areas that we want developed, and make sure that the strategy of the government, the high level strategy, matches with the investors. You're coming in, you are going to train, you are going to provide skills transfer, you are going to participate the local community and local content. We have to keep driving local content to develop. If we have to develop and take advantage of those resources that you now talk about, and while we are not developing, those are the missing gaps for us. Local content development in each sector and human capital development, plus investment and strategic level planning by all governments. And it must be a must. Education, as I just said, you need to provide it and make sure it's free of charge. And there's no country that has so much wealth like Nigeria and others that cannot say, let us provide education free of charge for our population. Why not? Why are you going to go after what we call white elephants that take billions of dollars instead of investing it in local content and human capital development? I can't continue to talk enough about this because I'm passionate about this, because this is what I see is missing. This is the gap. This is the gap that is missing. We need to develop local content. We need to develop human capital development. Absolutely.
The attraction primarily for Rwanda is ease of doing business, and every investor wants to go to a place where they find business easy or they can do business easily. So what are the conditions necessary for ease of doing business?
Ease of doing business, you can incorporate your company quickly. You know exactly what your costs are in terms of taxes. You know exactly what the limits are. For example, if you're going to get a tax holiday for investing, nobody is going to bother you with your profits. No one is going to tell you that you have to pay extra costs for things that, what we call hidden costs, and it just appears all of a sudden. And, it comes as a surprise. So ease of doing business is you must be able to come in, set up your company in quick time, bring your investment, open your bank accounts easily. Those are ease of doing business. That the government gives you tax breaks. They gives you a population that is literate, that is skilled. Those are the things that are ease of doing business. So people feel comfortable that when they come to your country, they know that they have a source of skilled workers. They know that they have ease of doing business in opening their accounts, incorporating their companies, and that, you will not be harassing them whilst they're operating. So once they know that, and the environment is safe, that's the other thing, that the environment is safe, so security. And if you've got those things and the infrastructure is there, if they have to move goods, then they feel comfortable. They feel very comfortable to come and do business in the country.
Interesting. I'd like to know, how would you assess the business environment and the cost of doing businesses in these countries that are of interest? And how will this pose any challenge, to any investor who is coming to these countries for investment?
Right. Well, one of the key things you have to look at power and the source of power. Nigeria, we have epileptic power here, for example, and people will find that they have to put a high premium on energy and power supply for running their businesses. And that sometimes could be, off-putting to the ease of doing business. In the other areas, they know that they have constant power supply. They know that their transportation system and road infrastructure is good. And those are issues that we have to address. So in Nigeria, one of the things that I think is absolutely needed to accelerate growth in Nigerian businesses and ease of doing business is fixing the power supply. Fixing the power supply must be priority number one in terms of attracting investment. Rwanda, constant supply. Kenya, constant supply. Egypt, I believe, also constant supply. Although South Africa is having now load shedding, but they already had before constant power supply. Now, those are, I think, one of the key factors in ensuring that you have also the ability to bring investors who feel comfortable that, when they come with their funds and their equipment, that, they will be able to operate with enough power supply. And that's one of the key things that I see that's missing.
All right, so for African countries that perhaps not named yet as investment destinations but would want to make the list, what are those things they need to do to make their country more attractive?
Right. First and foremost, as we said, let's get ease of doing business. How easy it is to incorporate, open a bank account, move your funds, and make sure that your funds can be repatriated when you have profit. Secondly, make sure that there is power and constant power supply. Thirdly, ensure that you have skilled, very skilled population. So that means accelerating your skill base in the country. And four, your infrastructure. Those are, I think, for any investor, even myself, if I'm investing, those are very key. And then what breaks are the government going to give you to bring your funds in and your skill and transfer your skill? So are you going to give us a 5-year moratorium, a 10-year moratorium on tax? What are the advantages and holidays you're going to give to my investment? Because people want to know that when they bring the investment, they're not going to be taxed to the hilt in the first few years, because they have to, they have to operate, they have to build the business, they have to build the company before they start making profit, depending on what kind of business they have. So they have to ensure that they make their country very attractive by highlighting those points. And, what investors do is the tick off. The tick off. Do they have good skilled workers? Yes. Is it easy to incorporate? Yes. The ease of doing business and account opening? Yes. Can I repatriate my funds? Yes. Can I have good infrastructure network? Yes. Power supply? Yes. So once they have just those very important points in a template, you'll find that they can reach to that level as well. And then they have to ensure that they make it easy for an investor to walk in, and he can have, those things that he feels comfortable with where he was before. And most of them, of course, are coming from Europe, where basically most things work. Their rail network, their transportation system, their power supply, their banking sector, the incorporation of companies, and they know that if they are coming, they must be accustomed to something very similar, very, very similar.
All right, we still have our guests with us, and we're still looking at the top investment destinations in Africa. But we need to go on a break now. When we return, we'll continue our conversation with our special guest. Stay with us.
Lateef Jakande. Born Lateef Kayode Jakande in the Ekpetedo area of Lagos Island, Lagos State, on July 1929. He studied at the Lagos Public School at Enuowa, Lagos Island, then at Bonham Memorial Methodist School, Port Harcourt, King's College, enrolled at Ilesha Grammar School, where he edited a literary paper called The Quarterly Mirror. Jakande began a career in journalism in 1949 with a daily service and joined the Nigerian Tribune in 1953. The owner, Chief Obafemi Awolowo, appointed Jakande editor-in-chief of the Tribune in 1956. Jakande established John West Publications in 1975 after leaving Tribune and began to publish the Lagos News. He served as the first president of the Newspaper Proprietors Association of Nigeria, NPAN. Jakande ran for election as executive governor of Lagos State in 1979 on the Unity Party of Nigeria platform. His administration was effective and open and implemented the cardinal policies of his party. He introduced housing and educational programs targeting the poor, building new neighborhood primary and secondary schools, and providing free primary and secondary education. He gave poor people's children education, and many of them are now very prominent in the society today. Jakande established the Lagos State University and constructed over 30,000 housing units. After the military takeover in 1983, Jakande was charged, prosecuted, and convicted of treason and later pardoned. He served as Minister of Works under the Sani Abacha military regime. He died in Lagos on February 11, 2021. Lateef Jakande was the first civilian governor of Lagos State. Lateef Kayode Jakande, Souq Enlightenment.
My name is Dr. Rafiu Oladipo.
My name is Baba Jalal Repega.
I'm Reverend Juliet Benite.
I'm Godio Didi.
My name is Professor Oladokun Sulaiman Olarawaju.
Souq News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Souq News.
So I'm happy that Souq TV has come into existence.
I'm happy to be here in the Souq News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Souq News is doing that.
Africa needs a voice of truth, and Souq News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Souq News.
Keep watching Souq News. It's a place to be.
Keep watching Souq News.
Morning and welcome to Early Exchange with Blessing Aite, Femi Ayodele, Sam Oruoje, and Idahosa Osamanze.
It's a national orientation agency. It's, as far as I'm concerned, very idle and unprofessional.
If government says that subsidy is not in oil and government is not supposed to be paying subsidy in oil,
energy or whatever kind of off-grid solution we will be looking at.
Today we are conducting mining today. Solid minerals, as an example, is, in no disrespect to anybody, is abysmal. We definitely need improvements in those areas. Of course, there are infrastructural needs.
This is Early Exchange, shaping policy, advancing development.
yes, indeed, our focus on this program is to shape policy and advance development, and that's why we're looking at the investment landscape in Africa, spotlighting the countries that are of interest to investors. And we have the big four. You have Kenya, Egypt, Nigeria, and South Africa. And our guest is still here with us. We still have Ambassador Wallace with us. Glad to know you're still there with us, Ambassador.
Absolutely, absolutely. You speak truth to power. That's Souq News. You speak truth to power.
Great to know, sir. Now, let's look at, from experience, I would like you to talk to us. What are some of the common mistakes being made by foreign investors when they come to the African climate for investment? Maybe other investors who are coming on board could also take some lessons from these examples. What are some of these common mistakes that they often make?
Well, some of the common mistakes, they still think Africa is, backward. They come with an attitude that they can lord it over the continent. And that is one of the missteps that many of them make. And they do not, have the community participating. They just deal most times and most levels with just the top echelons of government, and they don't dig deep into the culture of the country, into the mindset of the country, into the way of life of Africans. They see us, as most do, almost 70 to 80% of them, with the exception of a few who do, corporate social responsibility. They just are there to make the money, and we are their servants. So there's still the mindset of, Africans are slavish, they're there to serve, and, long may that continue. So the modern Africa, which is growing and evolving, and I'm thinking that the youths will no longer be like their parents and grandparents. You have to now meet us on equal terms. And they have to come with respect. They have to come and respect Africans now as equal partners. No longer is it serfdom. No longer the mindset of, the older folks who were not very educated in the sense that they did not go to school, though they may have education of the environment and, of things that they did with farming and tilling the soil, etc., which was the mainstay of most Africans, and that was the attitude, the British, the French, etc., just saw us as there to serve them. Now we have a huge youth population who I think, and I can see it happening, are not ready to take that nonsense because they are now educated from the point of view of, having university and other education and skills and fintech skills, which is, one of the emerging markets. And when you come to Africa now, you should be thinking, not to make the mistake to think that it is the way you read in the history books, that Africans, backward. No, it's not anymore. And that's why I keep saying we need to now push some more and accelerate more of our education and local content aspect. So they have to come now with the attitude, let us be partners in growth. Let us be partners in wealth creation. Let us be partners in progress. Let us be partners in participating in the world economy. So come with that mindset that Africa is now growing. Africa needs partners and investors who see the continent as a participating continent. Change the mindset. It's no longer serfdom. So the mistake they make is going back to the old historical training and books that they've read and stories that they've heard, because a lot of them coming for the first time come with an attitude that you're there to serve me, and to hell with anything else, just do as I say. I'm going to lord it over you. I'm Lord and Master. No, they're going to change that mindset. So they need to come with empathy. They need to come with participation, mental attitude. They need to come with understanding our culture, things that we don't adhere to, and respect it. They need to come and respect us as individuals and respect, our way of life and our way of, evolving our culture and our mindset, and grow with us. So come with that open mind and do not think that you're coming to exploit, because the days of exploitation is fast becoming a thing of the past. As you can see in West Africa, the bold moves that the youthful people from Burkina Faso and Mali and Niger are making. They're saying enough is enough. We've had enough of that yoke of colonialism, imperialism, and neo-colonialism, and we now want to be recognized as equal partners. What did they do, for example? They said, okay, you were taking our lithium, giving us cents and selling it for thousands of dollars. Pay the thousands of dollars here now. You are taking our gold and paying us, pocket money. Now pay the price on the world market. So they're woken up, and most of the youth of the continent are waking up and watching and seeing what the others are doing. And they are going to do the same. So come with the mindset, look, don't think you're coming to cheat us anymore. Don't think you're coming to exploit us to the fullest anymore. Think of yourself as coming to make money and create wealth together, participating. So they've got to change the mindset of master-servant. We are no longer your servants. We are equal partners.
All right, talking about partnership now, the reports about the investment landscape in Africa also says that African startups are focusing more on B2B business models. Now, it's good that we're having foreign investment, but what about domestic investment? Should this create room for partnership between African countries, businesses providing support for others? And how can the businesses here also the business in Africa position themselves as support for the investors coming to African countries?
Right, you have hit on a very nice point. For example, yes, intra-Africa trade is important. And now that we have the African Continental Free Trade Area, I think most B2B should now start happening between our various nations. I don't even want to call them countries because they were created. Reducing the border and creating B2B, right, between our nation states, Nigeria, Ghana, Kenya, etc. We should now show that we can do B2B between ourselves. And as we expand that, we are growing our businesses together, similar businesses, for example, form coalitions, form cooperatives. So then it becomes very attractive that we have a base of similarity, fintech in Kenya, marries a fintech in Nigeria, marries a fintech in South Africa. They now, consolidate. Now they can attract a veritable partner from abroad who wants to come and invest in fintech. And they see that we are already operating and have a base that has started to create growth. So most investors like to look at potential. What do incubators look at? Angel investors, what do they look at? The potential for growth. So if we start to marry our strengths, right, and our investment portfolio together, because, for example, you may just have 100,000 that you've invested in your business in Kenya, but your potential partner on a similar product base may have 1 million. You've pooled that together, that's 1,100,000. South Africa, you have someone else may have 500,000. You're now up to 1,600,000. And somebody in North Africa with another 1 million, now up to 2. So now you have a consolidated B2B base that have been created that you can say, now, look, this is what we have as collateral. We have 2.6 million. Why don't you come and bring matching capital and let's grow together and spread across the continent? Now, those are the things that, yes, what you're saying there is quite correct. If we now start to expand and relate and partner with each other to create a bigger base, tackle the same market, which is internal, and use the Continental Free Trade Area to grow and to develop, I think we will be doing the right thing. So your point there is very, very significant and very poignant. It is a point that I think all of us now should be looking inwardly and trying to find matching partners within the continent before we even look at investors coming from outside, right? Let us look at matching our strengths together, our investments together, and take advantage of the organizations we have. And some of the organizations that can help now are like the African Development Bank, the development banks in each of the countries as well, pooling capital to support, that type of growth. So we have it. Let's make use of it.
Looking at the countries, being spotlighted by this report, the hotspots for investment in Africa, Kenya is on top of the list. But as we speak, Kenya is also battling with serious debt profile, to about 25 billion shillings. And it's when it comes to IMF, it's the top borrower. If you look at the debt profile in dollars, that's about $154 million. Should this be of concern to any investors looking at this debt profile?
Well, it should be of concern to investors, but you have to ask why would countries like Kenya go outside of the continent to borrow and create that debt profile. There is so much that they can do internally among sister countries and among the development banks that we have on the continent. My view is that we should always look inwardly first. Go to the African Development Bank, where perhaps you will get loans at a lower rate, negotiate your payback, and divest yourself from creating debt profiles on the international market. And again, this is where we are talking about being able to pool our resources together. That's what we are not doing. And the African Union should be found guilty of not helping the continent. Why should each individual country, for example, have to borrow when, as a union, just like the European Union, as a union, the African Union should take fiscal responsibility on behalf of the entire continent. Negotiate on behalf of, and don't allow, you shield the countries, individual countries or nation states from having to have an impacting debt profile. So you sign on behalf of the continent, the African Union. You say, okay, you want to do business with us. All right, you want to loan money to this sector in this country, we will sign on behalf of the continent. Most of the funds that the African Union can now pool from the African Development Banks, from their own central banks in the various countries, they hold that pool and they do the negotiation on behalf of the individual states, nation states. That way, Kenya, for example, will not have to go and borrow from the IMF. Nigeria will not have to go and borrow from the World Bank. We are putting ourselves in debt and making it unattractive for investment because of the structure, the financial structure that we put ourselves. We're not thinking. Pool our resources and let the larger union represent us, the African Union. And there is enough funds to go about from the individual countries that can be pooled. We can set up our own African World Bank. We have the African Development Bank, we have several other banks. Where are those funds being employed and deployed? If not, that it should be pooled together and put into one unitary force, which is the African Union, that now helps and redistributes back to needed infrastructure, to needed development, to needed production and industrialization. That is the way, that's the changing of the mindset. We are too much into the begging mode. Yeah, let's run to the World Bank. Yes, let's run to IMF. What for? You have resources which can support and which you can hedge against funds. Why are we begging? Why are we going to these bodies who are taking your own money that they have resourced from your own resources and lend it back to you and then dictating what you must do? Structural adjustment, get rid of so many civil servants. They're now dictating how you run your life, how you run your nation, country. No, we need to change our mindset and restructure the financial aspect of how we operate as a continent. It's because we are not operating as a continent. We're operating as an individual nation state, and that's where it's gone wrong. Let the African Union take charge of borrowings. And, you know, we have strength then in numbers, and we have the resources to back up, you know, those borrowings. We don't need to have that type of millstone around our necks that, yes, you know, coming to Kenya, the debt profile is so high and it doesn't attract investors. And then what do they want you to do? They want you now to break up a lot of your plans so that they say, oh, now we are ready to come and bring investment because, you know, you're now investment attractive because Moody's say so, or Standard and Poor's say so. No, we don't need to use those reference points to tell how attractive our country should be for investment. We should be under a union, the African Union, and let Africa do its job. It's not doing its job.
Let's look at retaining investors or investment. It is one thing to attract them, it's another to keep them. Now, recently we've seen some investors exit Nigeria as well as some other African countries. How can they be kept?
Well, again, it still comes back to the ease of doing business for them. What are the reasons they are leaving? Is it one, that they have exploited enough and made enough money, and then now government policy is changing and that is no more attractive for them to exploit? Because when they came, it was total 110% exploitation. Is it now that government is asking them to invest more in, you know, their strategic policy, and it means that government is seeing and knowing that they had, you know, done a lot of bad policies with their investment. Is it insecurity? Is it that greener pastures, they can now take their funds and they can go to another country that has, you know, a big find, let's say, for example, Guyana in the Caribbean, where, you know, oil is exploding all over, and they say, oh, it's easier now. We have less investment to make in offshore. We can make more investment onshore in Guyana or in Angola. You know, what it is it that the policies that they have now make it easier for us to do business, and it's now tougher from Nigeria? But they have been there. The ones who are leaving have been there for years. Think about it, 40, 50, 60 years. So they may have thought, we've made enough profit, we can leave those assets now to the government and private investors, because we can take our money where we're able to invest it and have better ease of business and maximize our profit. Investors always think of maximizing their profits. So I think keeping them has to be with either we give them more tax holidays or we make it easier for them to do business. Because the ones who are leaving right now, the people who are leaving now, which is like the Nestles and the oil companies, they are looking probably at security. They are probably looking at the difficulties associated with power. They are looking at the other places where they can put the same investments and maximize their profit. So keeping investors has to do with the environment that they're operating in. What has made them depart? What has made them decide to leave? And I think those points that I just itemized there are some of the reasons. They don't just leave because they want to leave and, you know, that we can't keep them. But you have to keep them by making it easy for them to keep staying in the country to make profit. And I think in Nigeria's case, as you mentioned, it has to do with the ease of doing business. It has become more difficult. It has to do with insecurity. It has to do with, you know, the fact that government policy may have changed drastically, and they probably cannot do what they were doing before. And if that's the case, well, good luck to them. But other people will be coming and seeing markets for them to maximize their profit as well. So, investors come, investors go.
All right, investor come, investor goes. All right, we need to go on another break now. Our guest is still here with us. Don't forget, we're still looking at the investment sports in Africa. When we return, our guest will be in position to wrap up his thoughts on today's conversation. Stay with us.
The National Theatre, Igomu, built during the military regime of Olusegun Obasanjo and finished in the time for the Second World Festival of Black Arts and Culture, FESTAC, in 1977. The theatre holds amazing treasures and memories. The artworks fill everyone with pride. The National Arts Theatre is visible from the motorway which connects Lagos Island and the mainland. The National Theatre is packed with the artworks of legendary contemporary Nigerian artists, stained glass walls by Yusuf Grillo, sculptures and murals by Lamidi Fakeye, Erabo Emopai, and many others. It was put to full use for a month as one of the 4 venues of the Second World Black and African Festival of Arts and Culture, tagged FESTAC 77. The complex hosted 16,000 participants from 56 African countries and the diaspora in an unprecedented showcase of African music, fine art, literature, drama, dance, and religion. The National Art Theatre was built and designed by Techno Expert Stroll, a Bulgarian company mirroring the Palace of Culture and Sports in Varna, Bulgaria. Completed in 1976, the building is one of the largest and most beautiful of its kind on the African continent. It consists of a central hall with 5,000 seats, a collapsible stage that can be quickly rebuilt, a conference hall with 1,600 seats, 2 large exhibition halls, and 2 cinemas with 800 seats each. The theatre complex has a dressing room for artists, a garage, offices, coffee bars, and a buffet. It has indoor TV and radio systems, as well as booths with facilities for simultaneous translation of languages and hectares of lush green lawn around. The majestic structure sits in Igomu like a quiet mountain, mesmerizing visitors and passers-by. The National Theatre, Souq Enlightenment. Morning and welcome to Early Exchange with Blessing Aiche, Femi Ayodele, Sam Oruoje, and Idahosa Osamanze.
It's a national orientation agency. It's, as far as I'm concerned, very idle and unprofessional.
If government says that subsidy is not in oil and government is not supposed to be paying subsidy in oil,
energy or whatever kind of off-grid solution we will be looking at.
Today we are conducting mining today. Solid minerals, as an example, is, in no disrespect to anybody, is abysmal. We definitely need improvements in those areas. Of course, there are infrastructural needs.
This is Early Exchange, shaping policy, advancing development.
Yes, we're still looking at the top 4 investment destinations in Africa for investors out there who are looking at the investment opportunities in these countries. That's why we've been talking about some of these opportunities that you can take advantage of. And our guest is still here with us. Glad to know you're still there with us, Ambassador Wallace. All right. Let's wrap up the conversation by looking at the inflation rate in these countries. There's a pattern. They have something in common, which has to do with the fact that if you look at the inflation rate, double digits inflation rate, that of Nigeria, you have, according to the latest figure, 28.9%. That of Egypt, you have 34.1%. Talk to us. What are the steps that the leaders of this country, some of the critical steps they need to take in order to keep attracting investment into this country, improve the investment climate, and also, if possible, improve the inflation rate so that you can have a better growth and economic development in these countries?
Right. Okay. So we are not exporting enough, but importing more. That, of course, will affect your currency. So if you are driving inflation and you want to drive it down, you have to do more of export and less of import, because your hard-earned foreign exchange is being used to purchase goods and services abroad, and it is lopsided right now, as I said before. So therefore, we have to now look at how best can we improve and drive up our export to reduce the dependency on releasing too much of our foreign exchange, so that we keep inflation in check and also makes it very attractive for investors. So, for example, buy local. Why don't we set up a program? Buy local. So instead of going to various countries and bringing back cheap goods, the government should have a policy of let's buy local first. What are the key facets that we need in buying local food? One of the first things, let us make sure that our agriculture, instead of importing rice like Nigeria is now doing, we're now growing a lot of rice. Let's now continue with that and export the excess. Let us, grow our production and industrial sector, get Ajakuta Steel working, and start to implement, the key facets of growth for the country first, and export. So we have to grow our export potential exponentially. That way, we are keeping, inflation in check, and we are making it attractive for investors, because they're not going to see the currency as it is now, jittery, going haywire, because we have no control over the foreign exchange aspect is what is beating all those of our key hotspots. The shilling, the naira, the rand, they're all being hit very hard. So we need to concentrate more on export. We need to concentrate more on building infrastructure internally, buying local as well. Get our industries and our production and factories working. Why shouldn't we, for example, go back and invest in textiles in Nigeria? The amount of textiles that we import from China, from Switzerland, etc., it's damaging our economy, because we are buying something that we could create. Who has told us to make all those mills? We have the raw materials to keep it going. And let us go back to Adire, etc., and promote buying local, create, that mindset that we need to buy first locally. We need to trade first locally. And what we produce, we now export. So I think to make it attractive, we have to create the environment that we keep inflation in check, bring it down to single figures as much as we can, or as low in double figures if we can, by a policy of buying local, as I said, is one of the strategies. To create investment and to attract investors, as I said again before, and I repeat as a wrap-up, we look at, our power supply. We look at our skill set. We look at ease of doing business. Those are key, very key and important points to attract investment. Repatriation of profits. Isn't it that most of the airlines are now complaining that their funds are locked in the central bank. They have not been able to be paid, etc. Now, most people may decide that they're going to cut the routes. Isn't that what was happening over the past year? People have stopped flying and they wanted to go instead to Ghana, fly to even Togo, etc. Of course, the attraction for them to keep staying is the market and the volume of our people that travel. But it's not ease of doing business for them. And we have to be sure that we have the ability to attract businesses by the ease of doing business and the ease of repatriation of profits. Those are the key things that any investor looks at. So we've got to put our house in order and do the simple, necessary things. Build our own infrastructure for making ease of doing business within our own country first. Build our productivity, build our factories and industrialization, go back to buying local, spend the money within, let it go around 7, 8, 9, 10 times before it flies out in foreign currency. That's practical. If you look at the Jews together, they spend within their community. Why are they so rich? They spend within their community 8, 9, 10 times before the money leaves that community. We need to do the same. But instead, we are spending, right, on importing, more imports, and believing that processed foods, clothes and textiles from abroad, when we can do it here ourselves. And that's what we need to do. If we have to attract investment, first let's put our own house in order.
Consul General for the Caribbean of Antigua and Barbuda to Nigeria for talking with us this morning on the investment landscape in Africa. We appreciate your time with us.
Thank you very much.
And that's it. We'll go on a break. Return to look at a different matter. Stay with us on Early Exchange.
The National Theatre, Igomu. Built during the military regime of Olusegun Obasanjo and finished in the time for the Second World Festival of Black Arts and Culture, FESTAC, in 1977. The theatre holds amazing treasures and memories. The artworks fill everyone with pride. The National Arts Theatre is visible from the motorway which connects Lagos Island and the mainland. The National Theatre is packed with the artworks of a legendary contemporary Nigerian artist, stained glass walls by Yusuf Grillo, sculptures and murals by Lamidi Fakeye, Erabo Emopai, and many others. It was put to full use for a month as one of the 4 venues of the Second World Black and African Festival of Arts and Culture, tagged FESTAC 77. The complex hosted 16,000 participants from 56 African countries and the diaspora in an unprecedented showcase of African music, fine art, literature, drama, dance, and religion. The National Art Theatre was built and designed by Techno Expert Stroll, a Bulgarian company mirroring the Palace of Culture and Sports in Varna, Bulgaria. Completed in 1976, the building is one of the largest and most beautiful of its kind on the African continent. It consists of a central hall with 5,000 seats, a collapsible stage that can be quickly rebuilt, a conference hall with 1,600 seats, 2 large exhibition halls, and 2 cinemas with 800 seats each. The theatre complex has a dressing room for artists, a garage, offices, coffee bars, and a buffet. It has indoor TV and radio systems, as well as booths with facilities for simultaneous translation of languages and hectares of lush green lawn around. The majestic structure sits in Igomu like a quiet mountain, mesmerizing visitors and passers-by. The National Theatre, Souq Enlightenment. Good morning and welcome to Early Exchange with Blessing Aiche, Femi Ayodele, Sam Oruoje, and Ida Hosa Osamanze.
It's a national orientation agency. is, as far as I'm concerned, very idle and unprofessional.
If government says that subsidy is not in oil and government is not supposed to be paying subsidy in oil,
energy or whatever kind of off-grid solution we will be looking at.
Today we are conducting mining today. Solid minerals, as an example, is, in no disrespect to anybody, is abysmal. We definitely need improvements in those areas. Of course, there are infrastructural needs.
This is Early Exchange, shaping policy, advancing development.
Today with us, Lagos State government decided to ban what we call styrofoam. Here we refer to it as, disposable plastics. That's what is being used to sell maize around this, across Lagos. When you get to the street of Lagos, it's always obvious. It's always what's being used to serve meals across there. And this has been of concern to a lot of Nigerians. We have our guest here with us in the studio, and Blessing.
All right, welcome, Peter Bassi. Welcome to Early Exchange.
Thank you for having me. Good morning.
It's a pleasure to host you here. And looking at the new announcement of Lagos State and the ban on plastics, which is generally used for a lot of things as the container for many things, beverages, food, and all of that. First, what are your thoughts on that ban? Do you see it as something that should have not been an outright ban, maybe some time given before the ban?
Well, my response might be kind of biased because as an environmental advocate, it's something that I've been longing for it to happen, And people are saying there should have been enough time, but it's something that we've been promoting, even like from the civil society aspect of life in our society. We've been promoting, telling people, please don't use this and don't do that. So if government doesn't come up with these proactive measures, I'm sure we'll keep on just doing advocacy. So it doesn't have to end in advocacy. Policies have to be put in place. There should be people paying for it. I think this ban is mostly focused on the styrofoam. Styrofoam is kind of I think is the most dangerous of all the single-use plastics because like other plastic, like the plastic bottle, the PETs, they take like about 500 to 1,000 years to decompose. But the styrofoam take almost 3,000 to 5,000 years. So, for example, you went to Yabeji, you bought amala of 300 naira, and you spent less than 2 minutes to finish the amala. Then you threw the stuff away, and it's going to be there for over 3,000 years. Do you know what 3,000 years is about? So, and I think it's very cheap to produce, and it's cheap to use. But then the after effect is something else. It's something else.
When you're trying to explain this styrofoam, you're giving examples. Can you give more descriptive examples? Because when some persons hear styrofoam, they're wondering, what is that? Give examples so people can relate with it and know which is it. Yeah,
so when you go to buy something and you said, put in a takeaway for me, there's one that is like a plate that has a cover, but there's the other one that's light. It's a cork. It's very light, so even if you put it on, just keep it, the wind will come and blow it off. So that is the styrofoam.
The popular takeaway pack.
Yes, the popular,
get.
Yes,
okay.
Yes, not the other plates one, the one that is cork.
It looks a bit like foam.
Yes, it's foam. That's why they call it styrofoam. It's a foam. Yeah.
All right.
Yeah.
All right. As an expert in this, I would like you to paint a picture of the kind of hazards, the environmental hazards this will constitute to the environment, which is part of the concern being exhibited by the Lagos State government. Give us a picture of the kind of hazards this will constitute to our environment.
Okay, so that particular single-use item is for now, it's not recyclable. So that is why it's a no. Others are recyclable, so we try to recycle them, but this particular one is not recyclable. And even if you can recycle it, it will take a lot of money, finances, time to do that. And adding to the long period of time it takes, and the thing is so light, so even if you want to pack let me say 500 tons to go and recycle, or let me just say a ton to go and recycle. That means you need to fill the whole of this studio before you're able to get it done. So investors will not even want to invest in that kind of project. And you know, like I said, being unable to an item that cannot be recycled, it makes it difficult for us to have a circular economy. Because when you are talking about circular economy, you are talking about something that you can reuse, repurpose, or do other things. But this one, once you use it, there's nothing you can use it again. So it's always there. You go to the waterways. For some of us that we really focus on cleaning up the waterways that are there, people will eat, throw them somewhere, and you know it's very light, so it's easier to be blown away by a little breeze. Water will come, you know, flood will come, or just normal rainwater will flush them into the gutters, and even people are doing it by themselves. After eating, they just throw them inside the gutters, and you know, throw them anywhere inside from the cab to just throw them, and it will keep flying from here to there.
But is this going to put some persons out of business, the ban?
Of course, there's nothing that will not put some people out of business, but then, you know, that is why if you want to venture into businesses, you should be able to do kind of researches and stuff like that. Because if you are producing something, I'm sure these producers, they know the harmful effect of this stuff. So they know that recently people have been talking about plastic use and why these things are, you know, polluting the environment, and we are putting more focus on all this plastic and stuff. So they have these ideas, they know. So there should have been an exit plan for them. Are they going to maybe start producing the sustainable one? So you understand. So or were they planning to recover this product and, you know, work on them? So if they did not have that, then we can't say. I mean, the cost, the damage is the effect is more than whatever business benefits will be for these individuals. So that will also enable us to plan and say, okay, what are the alternatives?
All right. I was about going to that, you know, because I've read several comments as regards this issue, and one of the arguments is you don't have an alternative. Why is the Lagos team so much in a hurry to ban, you know, using what they call someone, according to the comment, military approach to just banning, you know, this material. Now, what could be the alternatives for those who have invested in this kind of materials, and for some of the food sellers that you have across the street? You can always find this across the streets. What could be the alternatives for them?
Yeah, so before the introduction of the styrofoams, were we not eating? Were we not taking food home? So how were we doing? No, just that we were looking at something that would be easier and then polluting the environment. For example, you go to buy food. Sometimes you can go to this place and maybe where you are going to buy this food is not even far from your house. So what is stopping you from carrying your own plate along, your container? You buy the food and go back to your house, or maybe back to your office. Or you sit down there and eat. Okay, fine. You know,
for instances, you're in transit, you're not that close to your house. What could be the alternative? That could be a challenge, which is why something like this is being generally patronized.
Yeah, so why don't you have maybe small food flags in your your backpack? Yeah, you understand?
Ladies can do that.
Ladies can do that, yeah. Maybe it's not that my small bag. Now we can have things around. So it's almost the same thing with water. We drink water here and there. So, you know, that is why you see people who are producing table water or this sachet water, they are not producing the water, they are producing the bottles. You understand? So we call them water bottle producers. You understand? So they are not even charging you really for the water, not the content. They're charging you for the cost of producing those stuff. You know, so it's just that we develop this habit and we feel that okay, it's the right way. You understand? So if you are in transit, you know you are going to somewhere, you can get something to put your food inside, and it doesn't have to be styrofoam. It doesn't have to be even plastic. As in this thing coming up is even going to help some of us who are innovating in this field, in this environmental field, recycling field, because there are substances that look like plastic, but they are not plastic. These are made from plants. You understand? So there's something coming up like kind of plant Plantastic. So that is the brand name, Plantastic. So it's not a plastic aspect, but if you see it, if someone doesn't tell this is plastic, you'll not believe. You know, so there are innovative ways to produce even all the single-use containers that are not plastic.
Okay. The reason the Lagos State government is given for the ban of styrofoam is the menace that the contributes to the environment. So banning is one thing. What about the pollution, the menace it has already caused? Is there a plan to clean it up?
Yeah, I think when I also read through one of the statements that the commissioner made, the commissioner for environment made, was that this cleaning up costs tens of millions of naira daily. So you know, so it's already causing a lot of havoc, and the government spending a lot of money. Even people in the private sector, like people like us, we are already spending a lot of money to support government to clean up this stuff. So if you don't ban it, that means it's like going to fetch water, trying to empty the ocean. You understand? So you keep cleaning up, and if the more you clean up, people are still. So it's as if you've not done anything. Like no matter the tons you evacuate in a day, surprisingly, you have even double of that at the end of that same day. So it's as if you are not doing anything. So it doesn't make sense to keep putting money in that kind of thing. There's so a lot of stuff that government can, you know, reinvest the money or rechannel the money, the funds into, you understand, more sustainable projects, you understand. So I know it's already causing a lot of people talking, you know, like you said someone committed the military approach. And like when I started, I said there are certain things that should be, we don't have to wait and say we want to be considerate and all that. The government has been considerate enough. And if you check through, these laws have been there. The federal laws have been there, the state laws have been there on these issues. But the issue has always been implementation. You understand? So it's not that it's just today that Lagos government woke up and said, okay, we've banned it. These things have been there, but nobody talked about it, nobody acted upon it. So I think it's a very good thing that it's the Lagos State government that is taking the lead, and we also wish that other states will follow. There's something that like this that happened a few years ago, I think 2020 or 2021. You know, let me dive a little bit. You know, charcoal is produced by cutting down trees, and we don't really have trees. We are planting trees, people are cutting down the trees. So national state government banned the production of charcoal. But then even if you go to that same state, people are still producing charcoal in such manner of cutting down trees, and other states too. So when that ban came from national state government, we were happy, we were making news, we were happy that this, but then we were wishing that other states will follow. But even the states that ban it, they're still doing it. So it's, I just hope that, just like the commissioner said, LOMA and other agencies will be able to implement the enforcement of it, so that it will not just be like just a mere word. You should be taken into actions, because, I mean, it's a global thing. It's a global thing, and it's also even giving Nigeria and indeed Lagos State kind of, you know, acknowledgement in a global stage that, okay, a state in Nigeria is taking action, so other countries that are, even the producers, because most of these things are imported, we should also be able to know that that means I cannot ship in this stuff from wherever into Nigeria and into Lagos State.
Let's look at what kind of engagement should the Lagos State government begin to have with, you know, residents, even those who have invested in this, because it is one thing to ban, it's another thing for people to understand the necessity of this ban. So what kind of education, the kind of engagement would you expect the Lagos State government to have with the citizens so that there will be proper compliance?
Okay, I think some of this engagement has been going on. We always have, because some of them are always involved, you know, joining, participating in this. We always have all these kind of awareness on plastic management and stuff. So it might be just to take it to the end users, make it more proactive, communicate to people using the local languages, going to communities, telling them you are giving your children money to go and buy food and take to school. So why don't you give them the food flowers and stuff? Or maybe government can say, okay, we can, support by giving you guys food packs. Maybe all these sustainable food packs. So government can do that, And I also know that private enterprises like organizations can even take it as just CSR. Okay, we are donating, let's say, 1 million food packs to people, instead of, because you can't just stop them from going to get these things, and these things are very cheap. Sometimes when you go to buy food, the food vendor does not even charge you for the styrofoam, because it's only when you need the other one that they'll charge. So people are also relaxed. After, they are not going to wash plates. So if you are giving a full flask, or you're going with your plate to buy this food, after consuming the food, you still wash plates. But this one, you are not paying for it, and you are not going to wash, to eat and throw it away. So it was easier for people who now became so reluctant and so relaxed. So the government can say, okay, we are supporting you people with these food packs, to use. Go and buy your. But after giving you that, if you still go and use your, you still go and use the styrofoam, then you are on your own. Yeah.
Okay, now you just pointed out that the styrofoams are cheap. The alternative to them, do you see them being as cheap as that?
Yeah, what makes some of this production cheap is the mass production. I am sure, and I can say that even when the first set of the styrofoam were produced, they were not cheap. But because there was demand, and they did a mass production, so let's say they would produce maybe 50 million pieces of it at the same time. So it will not really cost, and it's automation. They already created this machine too. It's just a mode, so they will have a mode and have automate the production. So there are other alternatives that are green, sustainable, that can also be affordable and even cheaper. Just for that technology to be automated, it's not going to be cheap to create that product, but when you are mass producing it, and maybe there's what we call carbon credit, there's what we call plastic credit. So these are kind of funds that could be given to companies who are producing greener alternative of all this plastic, or trying to recycle plastic. So those plastic credit can be given to companies who are producing the alternative of it. So that funds can help them to automate the mass production, and will make it cheap and affordable, because some of the raw materials are plant-based. So you can use maybe all this grass, weeds, like this plants that grows on the water. That's what I work on personally. It's called water hyacinth. You can use it to produce plates. Yes. Okay. Yeah. So
it takes a lot of technology.
Yeah, it will take a lot of technology, but if there are funds for the technology to be replicated, it can now mass produce. So it will be the product will now be cheaper.
Now let's look at the business side to this. That's always of concern to us, because we know a lot of this business owners might likely relocate or change their strategy. But these are opportunities for the ban, they are opportunities for investors. Yeah. Let's look at what are the opportunities available for them, because certain ban or certain trends could be blessings in disguise. So for investors or those who have invested in these materials, what are the opportunities for them? Maybe to diversify or look at other materials they could invest in.
Yeah, okay, so the styrofoam was not initially for making of plates. If you check your freezers, we have them. So there are other items that they are used for, which you can still make money from them. It's just that these people, they wanted quick money and maybe to save a need. Well, it's business to save a need, so they went into the plates production. So they can still produce so many other things that is not single use. So if you have them in your freezers and other stuff that works as an insulator, so you don't, it's not that if they don't produce their plates. If you go to their factory, you see that it's not only the plate they produce. You understand? If you, this food flask, this colas, those things inside are styrofoams. You understand? So it's not that they started this business. If you go to their factory, like I said, if you go to their factory, it's not that they started the factory just to produce the plates there are other things they are producing, so they can focus on those ones and maybe also invest or develop sustainable plate productions too.
All right, now, so for the other types of plastics that have not been banned now, do you think it should be smart for them to begin to look at alternatives before it gets to them?
Now, there's a speculation that in 2050, there will be more plastics in the ocean than fishes. So we've been promoting this, we've been saying it during World Cleanup Day, World Rivers Day, World Ocean Day, we've been talking about it, but nobody is doing anything. But some of these giants producers, they know it, and some of the top polluters, they are trying hard and to, cut down on this pollution. Some of them have made it demanded that maybe certain percentage, 50, 70, 90% of their packages will be recycled. So they try to invest money in the recollection of this waste, and they will recycle them instead of going to produce a new packaging material from scratch. So they are trying to do that, but I think we should do more. And the best thing is to just produce something that can decompose. And it's very possible. It's just that maybe they don't want to, because we also talk about the economics of it, So, but then, if we try to invest money into maybe plastics, eco-friendly plastics, we have plastics that can decompose maybe from the plant-based stuff and stuff like that. So they should invest money in that. They should be smart. They should not wait until there's a ban. They will now start crying, okay, this ban is military tactics and all this stuff. So I think they should be eco-smart and also climate-smart to know that eventually it will come to them. But before then, there are things we should do to prevent all these menace.
All right, thank you very much. Thank you very much, Peter Bassi, the CEO PIB, for talking with us on the ban on single-use plastics. Is it a step in the right direction? And as environmentalist, he has actually taken this position of this Lagos State government, saying that it's a step in the right direction. And for those producers of plastics, it may not be single-use plastic, like you just said. It hasn't come to you right now, but thinking ahead, you should look for alternatives before it gets to that point. And I think it's better for us all to provide us a cleaner and safer environment. Again, thank you for being on the show. As a package today, I am Blessing H. You can watch the show all over again if you didn't start with us from the beginning. Just go to our YouTube channel and be free to watch the entire show. You will benefit from it greatly, I assure you. The show comes again tomorrow, 8 a.m. West African time. And there are other programs that you would love, you would benefit from on Souq News. So please stay with Souq News. One of them is Market Insight coming up at 11 a.m. To enjoy your day. I am Blessing H.
All right, it's always good to be patriotic. The Lagos State government has come up with a ban. Let's see what we can do to ensure that we make our environment better, cleaner, and safer. I am Femi Ayodele. Bye for now.